Ladies and gentlemen, welcome to the 10th episode of the Futurum Equities Podcast. You got myself, Shay and Boloor, aka Stocks Every Shy. We got Daniel Newman, aka Danny Dimes. We are watching something pretty historic right now, actually. Right when we're starting recording, we are seeing Presidents Trump and Putin shake hands in Alaska with some badass photos, some fighter jets in the background. Alaska 2025. Pretty great sight to see these two kind of powerhouses meeting in a U.S. turf, and feels like it's good faith on something that's going to be positive that's going to come out of this meeting. What are your thoughts on this?
First of all, it is very historic. When you said pretty historic, you said it so quickly. I thought you said something prehistoric. I'm like, I know these guys are old. No, they're old, but they're not that old. I mean, this one's interesting, Shy, because one of the promises of the Trump campaign was ending the Russia-Ukraine war really fast. And anyone that's seen me and seen me at least a few times on Fox Business knows I at least have a little bit of a conservative bend to me. And I think the president's done a lot of things really well. Certainly, if you're in the market, you've been rewarded during this presidency. Having said that, like, this was one thing that hasn't happened. Like, he's said some things. He's done his typical provoke. He's done his, I'm going to end it tomorrow. I'm going to put sanctions on Russia. I'm going to stop India from buying oil from Russia. All the things that he's going to do. I mean, U.S. basically exited the country a couple of years ago. All the businesses pulled out. And here Russia is still out there, still doing its thing, still invading Ukraine. No end in sight to this war. So if this day, if these two get together and on this day, this ends, I mean, this would be like a clean sweep for President Trump from his campaign promises. But this has been one of those things that's been hanging in the balance.
Well, do you think the market even catches the big? Because I feel like they don't even care what's happening right now in Ukraine and Russia, which is crazy to say, but there's so much geopolitical tension happening elsewhere that affects tech a lot more. I don't know if it would catch a bid or not.
No. I mean, maybe some things. I mean, it might hurt some defense stocks. You might see a little pullback from companies that have benefited from the constant funding of these forever wars. I'm not in them. So, like, I'm not really tracking, like, the Lockheeds and the Northrops.
Well, no, you might be right, because Palantir has been weak past couple of days. Like, they're down 2%, down 3% yesterday. Like, maybe that's what's happening with that stock.
Yeah, I mean, maybe. Palantir's also trading at an unbelievably high price to sales value. It's still incredibly valuable. It's going to be incredibly valuable, but there is a chance that, like, there's a little bit of resting going on. I know that's something I said, like, thematically throughout the show. We should probably talk at least a little bit about, like, the run has been incredible. Like, the run from April 9th to here, every time we keep thinking we're going to get a little pullback. The other day we had that PPI head fake. Like, PPI comes out. We thought Trump was going to melt down. We thought the market was going to collapse. There was some pretty hard selling in the pre-market. And then the market opened and finished up green. Like, so we cannot get signal from the outside as to whether or not any macroeconomic events or geopolitical events have enough velocity to actually take the momentum out of this raging bull market.
Yeah, I mean, there's got to be a new variable, and I think the new variable might just be profit taking. I don't know, maybe United Healthcare just like catching such a bid after 13F season that it's just there's a reallocation towards the laggers. But right now, like today, indices are showing weakness. IWM is showing some weakness. I think there's been some weakness since the worst PPI report in 3 years. The market kind of shrugged it off, but maybe they weren't shrugging it off. It was just a prolonged, just slow bleed. That's not going to be like a 2% move, but it's going to anchor any kind of leg up. Maybe that's what's happening right now in the market, because what's catching bid today are the laggers. I'm seeing software catch a bid. I'm seeing blue staple Dow Jones companies catching a bid, but not really tech or the clear winners like the Palantirs, Robinhoods, etc.
Wait, hold on a second. I want to see something real quick. This is important. I don't know. I'm looking right here, guy. SoFi is catching a bid. Up 2.3%. By the way, after being down considerably in the morning, showing relative strength, seems to want to close. It wants to hit that 24 and expire all those options. I mean, it is a what? Is it a double witching or is it today a triple witching? Today is the big options day too. So the thing you have to remember on that second Friday in the middle of the month, it's always the biggest options clearings. So that can drive a lot of the activity in the web. Sorry, on the web, but in the markets, because a lot of the option volatility is being, the institutions are trying to kill the calls. They're trying to, you can kind of look ahead and see where there's a lot of call volume on a certain stock. You can often predict on that Friday where that stock's going to finish, because oftentimes those are the biggest indicators on the action that's going to take place in a day. So you've got the Trump summit with Putin. People are kind of on the edge of their seat. You've got PPI, which, by the way, was high, but I think this whole way we do, like I got an opportunity for Palantir. Can I give you an idea? Can I give you an idea?
Go for it.
Out there like an idea? I wish we could ask them. How about we get a company like Palantir that does amazing analytics and AI and technology to build a model that could help us better understand things like PPI, as opposed to using the Bureau of Labor Statistics to take BLS and whatnot, to spend months going to grocery stores and filling out census forms to figure out how much we paid for a bunch of grapes or a pack of Kleenexes, because everything we get is too far in arrears, it's too slow, it's too outdated, it's too inaccurate, and it's too political. We know there's a bend on it, because you tell me this, Shay, you're a consumer, you live in LA, right? That's why you're a rising star. You know how expensive stuff is: rent, car, groceries, insurance. Tell me that the inflation now feels worse than it did a year or two ago. There's no way you could tell me it does. It absolutely does not. And that's the thing that Trump has been beating on, is like, it's not worse. I'm not saying that it's not 3%. That might be right. But when we were getting numbers like 2.5% a year ago, it was like 20%. I mean, things were so expensive and and the price increases were so high. So my take on the whole thing is like, what do we trust? And the last thing I'll say about this is the trust in that all the data has been taken out. The revisions have destroyed trust. And now what Trump did, firing the BLS, going after the whole thing, has created at least half the country now doesn't believe anything. And remember the Michigan economic data, University of Michigan study about inflation, wrong. Atlanta Fed about GDP, wrong. And by the way, no one ever goes back. I tweeted it this week. I said, I'm going to start calling out my losses, because I've messed some things up pretty good, and called and miscalculated things. Like, we need to start calling out our losses to build some trust back with people, that you're not only going to do your victory laps on your wins.
No, I think what you're saying is very accurate. I think perspective is a lot of the driver of what today's reality is. But I also think that the market's reaction, it has been stick on the PPI, because that was like a very big potential black swan event that just didn't really turn into that. And I really do believe it's because the political will surpasses the actual weight of the data. Like, it's very much backwards looking, like you mentioned. And this was a clear inflationary shock. And historically, a print like this would push out rate cut expectations from September to maybe December, probably next year, but would not pull them forward. But there's a political overlay right now that's at play, that's overpowering the data that we're actually seeing right now, where whether or not Powell wants to admit it, cuts are coming. And the administration and Trump have both been very aggressive with the messaging that the rates will come down. So it's creating this kind of setup where if Powell doesn't cut rates like he said he's going to, it's fine, because whoever is going to replace him will absolutely cut rates, as make that a priority. And there is, even though the Fed is independent, there's clearly pressure in the public narrative on how they're going to be treating rates going forward. So I do think that even if they don't cut rates in September, the knowing it's coming, it probably gives it an excuse for this market to continue its trend of up to the rights until that occurs. Because I do think when they do cut rates, it will be sell the news event, because everything has ran up into entering that print.
What is the poly market saying on the September rate cut?
80%.
Okay, did it break it all after PPI? Did it go down? Was it higher?
It went from 83 to 80%. So barely it nudged.
So it's amazing that the cost of production has increased considerably And nobody believes that's going to have any impact on whether or not the Fed cuts rates.
Well, it's clearly they're going to you're seeing signs they're going to pass it to consumers. So consumers are going to see higher prices. That's what the PPI is essentially indicating to us, that way above estimates. Now it's like we're at that inflection point where consumers will hit it. We'll feel it. And I think historically the past couple of years, the consumers have been elastic. Like they've been able to pressure test a lot of things that we didn't think they could. And like you mentioned, like I think that there is somewhat of a elastic nature to how much the consumers can bend, and they haven't broken. And it's something that, combined with AI being the main event, rate cuts are coming, multiple of them next year, that is kind of having this combination of a really perfect storm for this rally to continue.
Yeah, the sub theme of all of it is we just go faster than whatever the negative impetus or the negative input is in the marketplace. It's like the entire strategy of the Besant Fed or the Besant Treasury is grow faster than we spend and inflate, right? You want to talk about stock? The strategy of CoreWeave is grow faster than you depreciate your Blackwell and Hopper. I mean, we just have this kind of overarching theme, though, in everything that we do is it's just run hot. Because like for the average, and by the way, this is a total case of like the investor class have way outdone the market. Meaning if you're an investor class right now, it's not uncommon that you have stocks. Like I was talking to the president of Cisco this morning. They're up 40%. Cisco is up 40%. I think you said it was up 72% at one time since the low this year. People invested in Cisco. That's like that's like your grandma. I mean, that's like what your and by the way, I like Cisco. But the point is like people that bought Palantir, some of them are up 400, 500, 600% in a period of months and years. Hims, it was a double for me for a period. I think it's a little less than that now. Robinhood, dude, I'm up 400% since March.
Mm-hmm.
So what I'm saying is like, so what if there's 3%? Like, who cares about 3% inflation when you have assets inflating? Like my Bitcoin is like doubled. My Ethereum has more than doubled. My Solana has like tripled. And this is all in periods of anywhere from a few months to a couple of years. So obviously this economy is amazing for the investor class. The problem with the economy is for people that live on paychecks, they're getting no increase in payroll, and rent's going up, insurance is going up, auto is going up, energy is going up. Mm-hmm. And whether it's, by the way, 2% or 4%, it's still really expensive. And then on top of it, we've got the most deflationary technology in all history in AI that's coming for jobs. It's coming for jobs in the knowledge realm. It's coming for anything administrative, any sort of entry-level job. Like, who wants to be a lawyer now? Like, who wants to be a first-year associate? Who needs it? Like, analysts, like in our space, junior level, entry-level analyst. That's it. There's an agent for that. I mean, and then again, if you're like, do things in physical spaces. I mean, I'm pretty sure Elon Musk is building cafes that are going to bring burgers to your cars with Optimus robots. I mean, so that's like the thing I'm looking at is like, when are we going to have the purge? I mean, when are you going to have to, batten down the hatch, Shy, and close down your windows, and maybe in LA, they're going to have to get guns back or something to protect you because God, there's going to be nothing left.
Well, I think that you also highlighted where you need to learn or prioritize a new skill set in the new post AI world. I think it's EQ is going to be one of the highest currencies you can probably get. That's not going to get replaced by AI. I think having a high IQ is a nice to have, not need to have anymore, because these AI tools provide the intelligence you need. However, you have high EQ and a good enough IQ, you leverage these AI tools, and that's how you get ahead of this AI tsunami is coming. So that's why I think it's really important to build on your soft skills than your hard skills. Like before I hopped on the ship at Futurum, like I was telling my team, I was prioritizing my team soft skills. Like I could care less what your modeling skill is. I could care less on your data extraction, data scientist. Tell me what to do with this data. Create a narrative. Like you do the first steps, second step. Now take it to the finish line, because that next step is going to be the solvency risk of your career. If you can't go from step 2 to step 3 and create a narrative and present, you're going to be a dud. And it's tough to say, but like you're going to be replaced by AI, and that's why it's so important to learn this new skill set. But I don't know if you if there's anything you want to add to that.
No, I mean, the only thing I realize, like, I sound a little doomsayer, but I'm just seeing like the knowledge economy. I talked about it, like the Wall Street Journal, or was it the Wall Street Journal that wrote the piece about the end of McKinsey? The biggest player in IT advisory is Gartner, and it's the stock that's down the most in the industry. And of course, you're just seeing more and more, like, it's just so obvious. I mean, maybe we talk a bit about ChatGPT 5. I mean, part of what just kind of made me realize this was when GPT 5 came out, I just started playing with it, Shay. I don't know about you. Have you played with it yet?
It's not that much of an improvement. Have you noticed a difference?
But there's a bit of that in the rhetoric. But look, one of the things they fixed is that, like, when you do a Google search, you don't like program or ask Google or tell Google which algorithm to run to bring you results, do you?
No.
In GPT-5, they fixed that. So, like, before, you used to have to pick a model. Do I use deep research? Do we use O4, O3? What are we using to actually come back to you? Now it actually knows. So it'll do a query. It'll give you a quick response. And then it'll actually query, do I want to go deeper? Do I want to get more into this thing? And then, by the way, it does all kinds of creation. You want me to make images? Do you want me to create SWOT charts for you? Do you want me to do a PowerPoint deck? And the stuff really works. And I find myself, I was just playing, and I wrote like 6 research notes, just prompt injecting. In like 5 minutes, I wrote these really polished notes. And of course, having actual knowledge and wisdom about what you want to write, and not just asking it a question and taking it verbatim, you could keep tweaking and tweaking and tweaking. But I was creating things, and then I was doing things like quarterly business reviews. And we've built, and I'm going to actually show you this later. That's why we're connecting it up. In our Futurum AI platform, I mean, we've built all our proprietary data, all of our analysis, all of our assessments, all of our market data sets, all of our customer decision data. And by the way, we sit it on top of a ChatGPT 5 service. So you can ask it questions now, and it'll find the proprietary data. It'll find the data from the open web, and it comes together and creates great responses. So, like, you think about so many things that we do that take so long. I mean, when you and I have conversations about how do we get this done, right? So, like, at some point, writing the idea of like creating research or writing your little sonnet-esque quotes and posts, Shay, with AI, everybody would be like, ooh, that's a no-no. I don't want Shay to write with AI. I want real Shay. Actually, I want to create a new product called sh.ai, Shay. Maybe people will stop saying your name wrong, by the way, if we spelled it that way. But like, at some point in the future, this is going to be the thing. Like, nobody's going to write anymore. Nobody's going to write like from scratch. There will be a point where it'll just end. It'll be a point like in the next 10 years, like driving, it'll become a novelty. Like, oh, you like to write? Like, oh, that's interesting. Like, when do you do that? In your spare time? Because nobody's going to just start things from scratch and write. Just like nowadays, nobody goes to the library and looks at microfiche to find like an article. You go to Google, right? When you want to find something, and now you go to Google plus AI. It's just the beginning, but this is happening so fast. OpenAI is moving the needle. Now, I will say one thing about it. They're not that much better anymore. It's not that much better than Grok, if at all. It's not that much better than Anthropic, Claude's new models. It's not noticeably better than Google. So OpenAI has a problem now, because it used to have this, like, it was sort of when it would drop the next model, it would be like a gap from everyone else. So now you have a company that's burning billions of dollars a month, threatening to spend trillions of dollars on AI infrastructure that has no meaningful gap in the market. That to me is interesting.
Well, do you think that innovation on the modeling front has plateaued, and the next frontier is going to be super intelligence? Like, we're at that point where we have a valley now, and the next point is going to be whomever solves super intelligence. Like GPT-6, GPT-7, there are going to be minimal improvements like iPhone 10 to iPhone 16.
Let me ask you this. What do you think is super intelligence? Like, how do you define it just for yourself?
Replacing, surpassing the human ability at a rapid pace. Like, I think not just replacing one person, but teams of people at a much higher pace. I forgot there's a derivative. There's a specific number that's substantially higher, and that qualifies for super intelligence. What's your interpretation of it?
Actually, I'm actually glad you asked that, but I actually think we're pretty close, if not already at super.
Really?
I did 10 people's job in less than an hour. So I don't know what the exact number is, but it says the AI system surpasses human intelligence in all or most domains, including scientific creativity, general wisdom, and social skills. I think it's pretty close. I pick a topic. Like if you asked it about quantum and asked it to write a paper, I guarantee it could do better than 99.9% of society. But you ask it if it wanted to write a paper about the impact of inflation, I bet you would do better than a large swath of society.
So maybe it's no hallucinations then.
And it really, you're right. But what I'm saying is at this point, with no more than a couple of prompts and a little bit of direction, I don't see hallucinations anymore. I know they're there, but it's vastly improved. And so, the boomers like yourself that are purists and don't really use the tools that much. I'm joking. Shai's like 9. The people, because here's the thing is like I wasn't really using it that much. Like I was kind of using it for a while up to like maybe 6 months ago as like a glorified search engine. Like I would ask,
and also for grammar, it's Grammarly essentially. Yeah.
Or like, hey, I'm kind of like looking for just an easy way to explain something. Like give me a rundown. Or I would use it for like quick earnings inputs from Perplexity. Now that you start to really figure out how to prompt it, how to lead it, how to guide it, and how to work with it, it comes up like it writes better than I could write almost every single time. And I'm a good writer. I've written 7 books. Like I am a real writer. I've written a lot of research, thousands of articles. I can prompt inject an article now and get a better output in 5 to 10 minutes than I could get sitting in front of a desk for an hour or two to create it. And by the way, I'm doing it for things like memos. Like I have a memo I want to write to the company. The posts I put out about our Futurum Signal launch, completely done through prompt injection.
Whoa.
And I even tell it things like write a more empathic entry, write something that talks about, compared to the old way of doing things, give a call to action at the end that like I can tell it and it will just do it. I have it writing statements of work for like projects, and in our system, it can write that. It can actually connect to our Salesforce data. It can connect to our ERP data, and it can actually do all the work. And it'll put in a slide, and it'll actually enter it into.
Let me ask: Does it remember what your like inputs are, like in the past? Like, oh, I didn't like this. I like this, and it just like gets ahead of it for your future inquiries.
Yes, so you can actually tell GPT-5 to remember things. Like, remember that this is like here's 5 pieces that I've written for daily signals. Remember these for a template, and then the next time you go and you say, write me a signal about this, and this. And it'll write it, and then you could actually add to it. Like, but I really think that this is more bullish. So take a more bullish stance. It'll make the piece more bullish. You could say, oh, you know what? At the end, add something that talks about how Futurum is now doing this kind of research, and it'll add a little call to action. It will, it's your wish is its command. It's very powerful. But kind of for all of our audience out there that's super interested in like the Sam Altman comment. Here's my spin on it. And I shared something. I went on Fox Business this morning. There's a video out there. Shay retweeted it in case you don't follow me. That's okay. I forgive you. The bottom line is that Sam's going to have to spend. Near term, he's going to have to buy more NVIDIA. He needs to train faster. He needs to move faster. He needs to deploy faster. And by the way, probably more AMD for inference because they're going to need more volume. And I mean, it could all be NVIDIA, but I think OpenAI has kind of shown its hand that it's going to work with AMD as well. And I think in the end, they're going to need their own chip. I think it's proving out now with Google kind of running the race and starting to get ahead that if you have both the talent and the infrastructure, you can outpace the off-the-shelf technologies. Because Google has set the bar. I mean, by the way, back to your all-time high. Anyone hear me make a call about Google over the last few months? Anybody?
You did. You nailed it. I think a lot of people. Also, everything you're talking about right now makes me just uber bullish on Broadcom. I was like, geez, networking is just going to be on fire for a very long time. Like, I don't know if there's going to be. I'm trying to think about what headwind there might be on that networking side, because right now I'm just seeing so much tailwinds on these like custom silicon chips that are just gaining momentum, and like it's going to get more and more people are using it. Once OpenAI creates their own, like watch out on how much networking is going to be required. It's going to be crazy.
It's an economics thing. It's an economics thing. Like people are going to get upset and think it's some sort of knock on NVIDIA. It's not. NVIDIA is the best at everything right now, top to bottom, unless you have unlimited amounts of billions in talent to spend to fully vertically integrate your stack. Because there's one big advantage to that. Google's profitability on its own infrastructure is exponentially higher than its profitability is when it has to deploy more NVIDIA or AMD for that matter. And so over time, if the bet is this, there's a reason that Mark Zuckerberg, who buys a lot of NVIDIA and will continue to buy a lot of NVIDIA, has to do MTIA, has to build its own inference accelerator, because he's building gigawatts and gigawatts of fabs, of data centers. And he's going to have to try to make money. And by the way, at some point, like right now, I don't know if you've noticed this, but companies that are spending less on CapEx are getting penalized.
Yeah.
We're actually in the great revolution. Like, you remember in the SaaS era, it was all about taking out CapEx and going to OpEx. We've actually flipped that in the AI era. The companies that spend more on CapEx are being rewarded.
It's because AI got proven. It's validated. I think so. People are feeling if you're under investing in that, you are lagging on how disruptive it's going to be. But you brought up a point that I want to talk about, because this was kind of the title of this episode. Is the U.S. government the next great hedge fund? I think
there's our header. You got to talk about
it. You spoke with the CEO of Intel just a couple weeks ago. I know it was probably nothing regarding this or Trump, because that's how quickly things move. But do you think this is a sign of what more to come, where you saw MP Materials, U.S. government, essentially U.S. is involved in that now, Intel, U.S. Foundry. My question is, when is the U.S. going to get involved with some rocket company, some quantum company? Like, these are all national security issues that the U.S. wants to make sure we're ahead of, and we stay ahead of it. And in order to do that, they have to have a piece of the pie. Like, what's your take on the Intel first, and then what's next on the U.S. government investment?
Like DARPA and DoD invest in a lot of these things. DoD has a program, RAMP-C program with Intel, and is using Intel. But this was a weird, like, just for anyone out there that didn't kind of see the whole cycle of events. I mean, President Trump came out basically last week, and him and Senator Cotton saying Intel's conflicted. Bhutan has too many conflicts, possible relations with China. He needs to resign. And then, like, 2 days later, Bhutan goes to Washington, meets with President Trump. President Trump says some pretty nice things about him, says he has a great story, seemingly has a change of heart. I don't know if this is all like playing games. Remember, Bhutan said if they don't get a big customer on 14A, they may cancel that node as a foundry node as well, kind of using the leverage that, and by the way, go on my Twitter. I'm on a rampage like 4 times a day right now. Like, we need Intel. Now, again, all of the debate whether Intel stays Intel Foundry or whether it just becomes USMC or some version of what Taiwan built, spending almost $100 billion in tax breaks, grants, and investments over the last 30 years, 40 years to create what TSMC is today. So
let me ask you this. This is another potential issue on TSMC. Do you think this is a potential headwind for TSMC, or is the demand so much higher than the supply that we're nowhere close to that potential issue?
What's our number one? What's the number one stock in our AI-15?
TSMC.
Okay. Do I need to say anything else?
No, I want to verbalize to everyone, because I get that question all the time. Like, is TMC in trouble? Because guys,
no, I mean, this is going to take time. I mean, as of right now, 18A is a internal node for Intel, which means it's only going to be used really for Intel's own designs, and 14A is like 2 to 3 years out. So they're going to start looking at tape outs. And the real question is, if the U.S. invests, they might even bring TSMC as a partner. Like, that is a possibility, as some sort of minority and JV partner to kind of come in and help run them. That was an idea that had floated around at one time because they have so much expertise. But it really comes down to just 2 things. One, we need more capacity. Ray Wong from our team and myself, we're going to drop a new semiconductor forecast, and you're going to see a number by the end of the decade of AI chips over $1 trillion a year in numbers when you see us drop this forecast. There's 2 rate limiters really of this forecast. One is going to be energy. Do we have enough power to power all the data centers that all these chips are going to go into? And 2, foundry. How many wafers do we have? Because everything, if you want to actually understand the model, if you believe we are at complete constraint because of supply, then you basically can model it out by figuring out the total number of data centers, the total number of watts, and the actual amount of fab capacity. Mm-hmm. And so how many wafers the fabs can all do together? Now, there's some things like optimization of power, nuclear. If we can get things stood up quicker, will there be innovation in foundries, packaging, stacking, yield efficiencies that could create more chips on the same amount of capacity? And will TSMC build more? Will Intel build more? Will Samsung build more? Because if all these things happen, we could expand. And I'm actually modeling that some of these things will happen because we actually can't meet the demand. So we need TSMC to come build as much as it can. But the one thing, Shy, in the end, stay with me here. I'm going to make you a semi guy before this is all over. You're going to become a semi guy. The one thing that absolutely has to happen is the U.S. has to control the IP. So if Taiwan is invaded tomorrow by China and TSMC is, blown up, we'll just use that really generic analogy as if that's how it would happen. All of its best IP, all of its leading edge, everything that comes beyond 2nm, the 2 nanometer, we don't have access to any of it. The foundries here that they build are generally at least one generation behind, and their best engineers are all over there. So how do we catch up? We don't. We don't have any options. So it would basically be like getting frozen in time. And that's the big leverage that Taiwan has on us. And by the way, there's a reason that Taiwan doesn't want their best IP here, because the US is a really nice, cozy security blanket over Taiwan, and we need them. So we basically become their security. They have a control over us because we can't manufacture our own leading edge chips at scale. By the way, NVIDIA and Apple can't fulfill their commitments to build here based on the existing amount of capacity. We need more. So all these things need a big, large, powerful US foundry network that is owned and controlled here in the US. So if I'm President Trump, I'm writing the check. And by the way, we spent more money on TARP bailing out banks doing, illegal and malicious and stupid stuff back in 2007 than we put into the CHIPS Act by an order of 10, by a magnitude of 10. This is the most important technology trend in history, Shy. You got to do it. You got to do it.
So I think it's a good. I agree. I think we need more AI factories. Essentially, that's what TSM and the foundries are. It's factories, AI factories. Like we need more of them to even out the supply and demand. I think it's gonna be a win-win for everyone once we have some more control of that domestically. But sticking on the topic of supply and demand imbalance, there is a new type of business that got created in this environment, and one recent IPO that's capitalizing on that, and they reported their earnings this week.
Are you going to talk about space?
No, we're talking CoreWeave. We're talking. We haven't gone to CoreWeave.
Well, you were trying to connect that to space. I'm like, I know you like talking about space, but that was
that's way far out. No, let's talk about CoreWeave because I think a lot of people are confused about their Q2 earnings on why they've been selling off since then. If you look at strictly what they reported on paper, revenue came in at 1.2 billion, up 200% year over year, way ahead of a consensus. I think their backlog even doubled to like 30 billion right now on a back of like multi-year hyperscaler expansions, and they just had a recent 4 billion OpenAI deal signed this past quarter. So why has it been selling since then? I think the report is like on Tuesday or Wednesday. It's because this is not a long-term moat. I really do believe that they're capitalizing on a moment. The top line looks unstoppable in this phase of the AI build out, and the demand signal we're getting from both the hyperscalers and all the enterprise customers that we talk to and listen to is as strong as anything else in the space. But I still can't get over the leverage and depreciation model. I know you talk about this all the time as well, where they closed the quarter with $8 billion of debt. And while they have been very proactive in lowering their cost of capital, like cutting their non-investment grade borrowing rates by, I think something like 1,000 basis points through recent financing, which is a great financial engineering win. But the absolute level of leverage that remains significant for a company operating in a market defined by rapid hardware turnover is something I just can't get excited for. Like they just dumped over $20 billion in CapEx this year alone, heavily weighted towards Q4, but which means that a large amounts of their high cost, short lifespan GPU infrastructure will hit the books and start depreciating almost right away. And I just think that the operating expenses are already nearly quadrupled from a year ago. I just don't see like the way that the time windows are getting shorter and shorter between the Blackwell, the Rubin. I forgot what the name is after Rubin. Like they're constantly going to have to invest in the latest and greatest. And this depreciation model is unsustainable, and eventually, nobody knows when, there's going to be a balance of supply and demand. And I just don't know what their CoreWeave is going to become in that phase. And until then, I just don't think they're going to be profitable like a lot of people think. Like, what's your thoughts on CoreWeave?
Well, first of all, just say Ultra after whatever if you want to really know what's next. But I think you're talking about Feynman.
Feynman, I always forget that one.
Yeah. But so first of all, remember when I talked about the Besant strategy? You just got to grow faster. This is where they're at. This is a company that just it will stand the test of time. But I see offerings coming. I just don't see any way that they're not going to create more shelves and more offerings. They're going to need to raise more cash. Of course, I think companies like NVIDIA will back them. So if they have a big offering, I could see a company like NVIDIA sort of chewing all that up. It'll get chewed up faster than a SoFi offering, which is pretty hard to do because it's well low. But in all, and they say I don't talk my book. But this is what they're up against. I mean, this is a company that has 6-5 year depreciation on a products that have 1 year to 2 year cycles at best. And realistically, the innovation from generation to generation tends to be close to triple-digit % efficiencies gained in things like power efficiency, inference throughput, memory. So, by the way, are you drinking booze?
Celsius.
Oh, that's almost as cool. Anyway, you look like you have like a Tom Collins. I'm like, what are you doing, man? I'm like, I know you're smart, but you should do the show sober.
1 p.m. on a Friday.
You should do sober. You should stick with doing sober. You're not that smart. We're gonna start doing like the Joe Rogan thing, you and me, like just smoking a blunt, like him and Elon did. But I think they've just got a very complicated accounting business, and I think they'll always have investment support. I think they've got some great capacity. We saw what happened with Amazon. There is just so much demand if you can offer capacity. But I do think building this thing, it's a bit of a house of cards to deal with this accounting problem. Like, I don't know how they're going to deal with it because so much of what they're showing is their quote unquote EBITDA is all based on the duh. Yeah. And, you can't spell duh without DUH. It's like not DA, it's duh. Like, I'm a net income guy. I want companies that create cash flow. NVIDIA is a great business, creates a lot of cash flow. So this is a business that has some scale. It's going to sell every bit of capacity that it has. But I feel like the CFO, if he had hair when he started or she started, probably doesn't have hair anymore.
Well, let's see what the guidance is even for CoreWeave for like next 3 years. I haven't even looked into that. So like you mentioned, EBITDA is a bit misleading in my opinion on valuing CoreWeave, but they still get that all the time.
Yeah, they raised guidance. I mean, by a lot. They raised it from 4.9 to 5.1 range to 5.15 to 5.35.
So there's showing that they're going to be income. They're going to be net income positive by end of 2027, which is interesting to see. They're supposed to be making 1.2 billion 2027, up to 2 billion in 2028.
But they're spending almost their revenue 1-to-1. Almost. They're spending, not 1-to-1. They're 5.3 billion. No, actually, they're outspending it. Their Q3 CapEx is going to be 3.4 billion.
That's I'm surprised.
It's 5 billion.
Yeah, I'm like surprised by these estimates because I see no leverage right now on margin that they can pull. I have seen no evidence since they've been public. So it's really there's going to be some inflection periods in the next 2 years that the Wall Street's kind of anticipate.
I do think that Nebius is playing it a little bit more.
They have a lot more other offerings. Yeah, I agree.
And they've been a little more focused on the value add, not just capacity. And I think value add is going to be important. I think they're going to have to figure out how to add something on top of just GPU capacity to make that business hum. Something with high margin, something that doesn't require so much CapEx.
Software. That's the only way. They have to do some kind of software offering on top of it.
What is that? Because I don't know, I'm building websites in like 2 minutes now. Like
I guess
something lovable. I'm telling you, I am blown away with AI. Like I literally built a landing page, like a business, an entire business, connected it up with Stripe, ran the whole thing in like 10 minutes using Lovable.
I should play around with more. You're right. It's kind of crazy how little I play around.
You're too young to be this disconnected from using this stuff. I'm gonna make a tech nerd out of you. We can't just be
I have
poet.
so much control issues. I think that's why. Like I have OCD of like I don't trust what I see from it, but maybe it gets better with time. I have to test it out. But I did want to talk about Cisco though. We forgot to mention Cisco because we talked about it briefly, and a lot of people are surprised by the outperformance this year when you've been one touting old as blue with a lot of these names. And a lot of people don't think of Cisco as a security company. They made it on their Cyber 7 on Futurum's list. And like, there's a reason for that. Can you talk more about A, their earnings, and B, what their securities offering is and how they're capitalizing the cybersecurity thing?
Yeah, absolutely. First of all, how do people not think of it as a security company? I mean, it is more of a network company, but Cisco, rather than just beating the numbers, because anyone can look them up, but it was a BBB, like everything was good.
Triple B.
Okay? and quietly, the stock has run close to all-time highs, like I said earlier in the show, up to like 70% or something off the lows. I think it pulled back a little bit. It got like an upgrade from Bank of America. It got a downgrade from UBS, and I think the stock kind of plateaued a bit, but it's also run a lot for a company. But you know what I've said a lot, Shy, is companies that actually give an AI number will win. Companies that we talked about this with AMD. We were frustrated. Now AMD has a cult like retail following, so they can overcome some valleys, But like Cisco doesn't have this luxury. But what Cisco did, what Chuck Robbins did, and I talked to their president, G2 Patel, today. He actually joined me on our 6-5 podcast, another show, part of Futurum family. I talked to him about it. They gave a number on AI backend. So we talked about networking, right? You love Astera Labs and you love all these companies. Well, this year they did $2 billion in revenue with backend AI networking, just for AI. So their network business for AI is starting to really shine. And by the way, that $2 billion was 100% above what they expected it to be. So the actual growth, and this is also not just hyperscale, this is enterprise. So what I like about Cisco is the enterprise AI opportunity is moving a lot slower than the hyperscale and the consumer AI opportunity. So who's going to win? Well, AI and enterprise IT environments are super complicated. Software is complicated. Infrastructure is complicated. They have their own data centers. They have edge data centers. They have stuff in 3 or 4 different clouds. They've got compliance. They've got governance. They've got policy. They got to deal with all that. Cisco has a ton of provenance here. Talk about domain knowledge. So this is why companies like IBM, HPE, Cisco are having a bit of a renaissance, is because these big enterprises can't just go to CoreWeave and say, make me an AI company. They've got to deal with all of the complexity and the unwinding of their existing IT estates, for lack of a better word. So that's the Cisco story. I mean, all the networking, all the connectivity, they've got the compute angle now with NVIDIA too. You can stand up the whole system, and they've got a ton of enterprise customers. On the security side, I mean, they're hitting it from all ends. You got firewall, you've got, AI powered security, you got zero trust, you got unified management and architectures. Of course, you've got a pretty big ecosystem for them as well. One of the things I like that they're doing is they're doing a lot of stuff for like enterprises that are trying to implement LLMs. So one of the big challenges is, is like when you use an LLM, you don't want proprietary data being fed in, and you don't want employees or people to be able to hack into your system and inject prompts that create bad things. So they have systems like that they built to monitor that. So they call it AI defense. So they don't only have kind of like your traditional firewalls, but they also have their AI defense now that's helping enterprises to be able to deploy AI solutions and enterprise search and LLMs with proprietary enterprise data, stuff that can't spill, like at banks or hospitals and healthcare systems.
Let me ask you this. Cybersecurity is a highly fragmented industry, and I think there is going to be nearly impossible for the smaller players to succeed due to the top of the funnel is becoming more and more platforms. SentinelOne getting acquired by Cisco. How do you think that fits on their endpoint offering getting approved with what SentinelOne has to offer?
Did that happen?
No. I was asking, what do you think about that potential like acquisition? Like, would it make sense for Cisco to really push the foot on the pedals of becoming that cybersecurity narrative by acquiring a great company that just has an awful go-to-market strategy, which is SentinelOne?
I don't track SentinelOne closely. What I can say is I know the two companies have a strategic partnership, and they do go to market together at times. because the other thing I didn't even mention with Cisco is, you remember they bought Splunk. So they also have the whole SIM solution within Cisco now. So I don't know, if this would make sense. I think after the Splunk deal, it would be unlikely. But I do know that clearly Palo Alto, clearly it was close. Like that was probably happening because then that CyberArk, I think Palo was trying to get a big deal done, had a couple of things in flight, and I think that's why that broke out there. I think their endpoint focus could be valuable. I certainly do think the fragmentation and consolidation is a play. Microsoft, Palo, CrowdStrike, Cisco, they're all going to want to get their portfolios bigger. So that could make sense. I think after Splunk, a $20 billion deal, I just don't see that happening.
Gotcha. Yeah, I just want to gauge the interest.
Yeah, no, it's fine.
Right now there is kind of I'm seeing the option flow right now for the sub $10 billion software companies, the Confluence, the GitLabs, the SentinelOnes. Like they're all pricing in some specific price targets in the next like 6 to 12 months. I think there's going to be somewhat of an M&A spree, and I think that SentinelOne's going to get acquired. I think GitLab's going to get acquired. I actually would love IBM to acquire GitLab, but another one is Confluent. I think Databricks is going to acquire Confluence. It makes too much sense on streaming data and what they have, and I think Snowflake just acquired. I'm always blanking on the animal name that was a streaming data competitor. It's not Red Panda. It was something like that. But either way, I think there's going to be a place where these beaten down software names are going to somewhat catch an M&A bid from retail on like, all right, what's next to run that has a high floor, good tech that's undervalued, that probably have will get acquired from the bigger players. But anyway, so those are I did want to talk about this next name because I know we're about to run out of time as well, 10 more minutes. Applied Materials had a really interesting earnings yesterday, and I think it drove down a lot of semiconductor equipment companies like KLAGs, ASMLs, Lam Research. Like, what's your take on yesterday's earnings report? And I know it's because they excluded China and they were playing the conservative game, so the market didn't like it. They took it down. But what's your take on it?
Yeah, that was my take. And I did talk to the CEO's chief of staff right after earnings about the news. They're just super conservative. So everything was basically as if China's off limits. But a couple of things are real tailwinds for AMAT. One is this whole build in America. It's going to be really good for U.S.-based manufacturers of supply supplies of equipment for semiconductor. Two is they have the tailwind of as things open up, you'll see more pull through for Applied Materials. So like they're saying they're not going to get any of these export licenses. They're saying that like they don't know if NVIDIA will get their export licenses. They just don't know what will actually ship in the quarter. So basically the way they guide it, everything from here is upside. So it's sort of one of those things like you could even see a mid-quarter guidance jump because if something opens up, if export licenses are granted, all of a sudden Applied could see a real tailwind. They had a great quarter though. They had records. It was all records. It was all up. But, this is one of those cases where a guide can absolutely blow you up. And what did the market pull back? It was like almost 10%. It was a big pullback on those earnings. But I like the company. I like its necessity. I don't like dependence on China right now. What I loved about NVIDIA last quarter was it beat without China. And anyone that's sort of guiding against it, because the policy is just so uncertain. But I actually do think, this is just my instinct, I have no inside information here. I think you're going to see the China market open up a little bit. It's not going to be something above an H20. They're not going to get better silicon, but I think they need it. They want it. The whole we don't want it thing, it's all, in my opinion, political theater. Absolutely.
Did you see the headline about DeepSeek? How DeepSeek just like is now having to play catch up because they had to build on Huawei's. Oh my God, I'm Crunchy Data. Thank you. That's the streaming data competitor for Confluent. But yeah, China had to build on a non-NVIDIA like product, and DeepSeek now is playing catch up because they are far more behind than they actually wanted to do. And I think don't believe the propaganda. They need U.S. silicon. It's chef's kiss It's everything else is just it's water
They
diluted
need
version
the
down.
NVIDIA stack is what they need.
Yeah.
They need the development stack. You can't do it on Huawei in anywhere nearly as efficient a manner. Those chips are more powerful, Shy. You can't, their software, CANN, is not CUDA. And so for these that are training and building models, it's just not competitive. And there's a reason why China's clamoring. And that's why I said that 15% will be eaten by China too. They don't care. They want what we've got. This is our power right now. The entire balance of power right now, and why we're going to get rare earths is because China needs NVIDIA. And so they're go ahead.
No, I was going to say, I think you're valid because we're going through so many different super cycles right now at the same time. And I think that we have the Trump administration emphasizing how America has to stay ahead of these super cycles is what you kind of want to see. Exclude your political perspective on what's happening. Just the ability of having a co-ownership stake on the necessary materials for AI is huge. It deleverages China's rare earth leverage that they had over us. And I did want to pick your brain though as well. Like we got clearly they're evolving themselves, the U.S. government AI. Do you think that the next super cycle they're going to try to tackle is space?
This one's for you. I'm going to kick this one back to you. I'm not tracking. I'm not invested in Rocket Lab. I have not bought ASTS. I'm not following those as closely. I think space is interesting, but I think it's a few frontiers away. I think things like satellites and for internet and stuff, amazing. Like love my. Do you use Starlink? I have Starlink. It's next level.
Oh,
absolutely. I'm not using it right now, but I have it. Anytime the internet goes down, I just throw my Starlink outside. As long as it's, as long as I have a clear look at the sky, I've got good internet. It's unbelievable.
You make me feel so analog. I feel like I'm like the geezer.
Dude, we are the leading technology research analysis firm for the world, man. We have to, you gotta eat your own dog food, drink your champagne.
No, you're right. But let's talk about space though, because I think one of the two names that I'm super bullish on that theme reported their earnings this week, and they've held a ton of relative strength during this any kind of pullback we've seen, and that's AST Space Mobile. If you guys don't know who they are, they're essentially building the American Tower of Space, is like what I like to say about what they do, and they're kind of pre-revenue, which is why earnings season is really tricky for pre-revenue companies, because what is there to really report? It's a $15 to $20 billion company. They're reporting in like $3 or $4 million, for example. Like it's minimal, but there was a ton of momentum that got reported this earnings cycle. And I think the earning call underscored how much closer they are moving from the narrative that they've always had for years to actual execution, where they provide the manufacturing cadence. It's very real. You're seeing the satellite design that now has taken a massive leap in capacity. So that's another validation of what they're doing. And they are playing somewhat of a regulatory chess game around the spectrum that's quietly like locking in one of the most defensible moats in telecom. Again, they're not trying to replace the AT&Ts of Verizon, T-Mobiles. They're trying to add on to it. And it's going to help a lot of those OEMs as well. So like, I think the scale of the build outs anticipated from 45 to 60 satellites by next year now feels operationally funded, because they have $1.5 to $2 billion in liquidity right now in play. So they don't need to dilute in order to hit that 45 to 60 satellites by next year. The biggest gem from that earnings call for me was the government momentum. That's why I want to kind of highlight. I think that the government's push on all these super cycles is very real, and there is a national security component to it, which gives these early disruptors, first movers, a massive advantage right now. ASTS had, I think it was 8 U.S. contracts to date. That was tangible tactical demos with multiple branches of the armed forces participating in it. And there's a pipeline that they're so confident that will evolve into a full program of record scale. Like this doesn't feel like really optionality as much anymore. It does feel like somewhat of a secondary mode or a parallel business line that's kind of participating in this accelerating budget tailwind that we're going to see from the US government. So I do think that the second half this year, they're supposed to be getting $60 to $70 million in revenue. That's going to be their first inflective period of like, we're actually making money now. Always the biggest if on pre-revenue companies is, can they scale? Because scaling is very hard, especially in these CapEx models. And I'm sure you can speak on the semiconductor front. Like the ideology of this is great, but execution is always the big if it can scale without any hiccups. Most of the time, there's going to be a hiccup. So we're going to see about that when it's a $20 billion company. But either way, I saw a lot of positive in the earnings call. So when it dipped 5-6%, I was like, oh, it might be some profit taking. Went up 15% the following day. I think it's, again, there's only two ways to participate in the space trade in public markets, ASTS and Rock Lab. And you guys already know my perspective on Redwire. That red flag across the board for what the CEO did past couple weeks. I can't trust that guy again or their management company. But yeah, that's the last thing I want to talk about space, since I guess do you want to, oh, you're waving to me or someone else? I did want to pick your brain though, Daniel. Something that really interesting happened today that emphasized the power of retail, and we can close out on this. Did you hear what happened with Opendoor today?
I heard the CEO resigned.
Do you know why? There was
I knew that.
Ton of heat from retail the past couple of weeks. Like they're claiming fire her. Like, what is she doing? She's gone on TV like once every 6 months. Like she's not really doing the normal cadence on sharing her company's vision. This guy named Eric Jackson, that he's on the media circuit with us, was a big leader of this group that was claiming like, get her out. Let's get someone who actually believes in retail, has participates in our vision to make them a $50+ stock. It actually happened. She left. I think that's it's maybe the beginning of times to come where retail has a heavy weight in deciding what a company wants to do. You have any takes on that?
So my big read is that there are certain companies that once they get attached to retail have a certain expectation. We talked about the showwoman CEO, the showman CEO. When you're in the middle of a moment like Opendoor had, that was that. God, I remember the CEO of AMC Theaters, and when AMC was getting pumped during that period of time, and then you had the whole GameStop thing, like where people got active and got visible during that moment because it created momentum. You already had, so there was a lot of momentum for Opendoor. I still think it's a garbage company. Personally, I absolutely do not believe in the thesis behind it at all. But she had a moment. There was a big pump too. I mean, it was pumped up to from 80 cents to $4, $5. Mm-hmm. It had a huge run. And I think with all the support it was getting from retail, they wanted her to kind of come out of the shell, do a little Vlad show, do a little Alex Karp show, do a little, sing songs, tell stories, how they're going to solve a problem that people don't even know exists. And people don't even care if it's 5 or 10 years into the future. They just want the story to be told. And she may be a little more traditional. And so, I've seen that kind of pressure on, I make the SoFi comments, but on Noto, because he's a good CEO, but he's not, but at least he goes on CNBC every quarter and does the circuit, I mean, I know a lot of CEOs, Shy, that just hide when companies aren't performing. They hide from media, they hide from public, they hide from analysts. And I think retail has changed the paradigm of which you can get away with that. So retail can come in just like activists used to be able to come in, right? When a Dan Loeb would come in or Carl Icahn would come in and they would demand. Well, now retail can demand because retail basically put that stock up and retail took that stock down. And a lot of the thesis behind Futurum Equities was about the fact that retail is an institution at this point. Retail individually is not an institution, but retail, when you have the masses, the many, GameStop showed it. We've seen it with others. It can actually destroy even institution shorts. I mean, it can go against the grain. So I think without knowing a lot about the story, I think you're going to see more of that. When a company is beholden to retail, the CEOs have to respond and start to build relationships with that audience. And if you don't, Be damned. I'm sure she's going to be okay though. I'm sure she's going to be okay.
Well, you guys heard it here. Retail's the new activists. So we are the new Carl icons. I agree with that sentiment. So I kind of want to end on that positive note as well. So,
Well, can we talk about one last thing since we just had a couple of minutes, and I'm actually for the first time ever we got to the end without being like, oh my gosh, we're out of time. UNH, Warren Buffett,
oh yeah,
and the pullout, right? Like, you worked there, and so I'm going to get your take on it. But this was like after you shared it. I think I reshared your tweets. I commonly do that. I try to really pump your persona. It was the most obvious Buffett investment ever. A stock that ran from about 600 to like 250, right? With some constraints, some fundamental stress, but overall market that it's got cornered, right? Like they're the biggest. They've got the market cornered. They largely control their pricing. There's a little bit of obviously external regulatory issue with them and ACA issues and stuff like that they have to worry about. But like, it was overdone. Like it was definitely, obviously overdone. And so for a Buffett, like that, doesn't it seem like the most Buffett trade ever to you?
It does, because again, they're the largest insurance company in the world. They're going through a hiccup on whatever you want to call it, the DOJ, MedX costs increasing, the V28 changing RAF scores. So they're actually making less money without doing any different quality of work. Like there's government saying, you're making less money, keep doing what you're doing, but we're giving you less. That's what happened in the post V28 world. So there's certain things that are outside of United Healthcare's control, even as the largest insurance company in the world. Like even if they have the Batman to the CMS line, there's only so much influence they have over the RAF scores. Like if you guys don't know what the RAF scores are, look them up. That's how essentially these companies get paid on scores based on risk. I won't get into it too much, but look up RAF scores. So I think that when people anticipate though, this is going to be like a meta 2022 situation, very misleading. I don't think it's a situation like that at all. This is purely outside the organizational control. So there's nothing United Healthcare can really do. Meta, literally Zuckerberg just said, I'm going to stop allocating so much expenses towards Reality Labs, and I'm going to care about shareholder value now. That takes literally 1 quarter to pivot away from. What United Healthcare is going through, it's going to take years. So now the argument can be made is a fairly valued now with the DOJ lawsuits, post V28 world, MedX costs going higher, etc. Like I think it's going to be a very slow move up. I think that you saw all the whales participate in UNH in Q2. Nobody knows if they still own it. That's why I hate the release of like all their books, because it happens after the fact. You don't know if they still currently own it. They might have all bought at 250, dumped at 300, and now retail's just thinking, oh, they still own it, and all of a sudden we're going to see they're holding the bag.
It was easy money though for someone like a Buffett to ride that.
Totally. When you have so much capital, yeah.
It's again, I think he will invest and he will stay in it. I think he's going to ride this thing back up, and it may not go back to 600, but easy 30 to 50% over the next couple of years. And when you're running a fund the way Burke does, I mean, that's a great return. So and by the way, what I liked most about it was it pulled my guy Oscar along. So Oscar Health got a nice pull along because it kind of showed, because it was almost like death and carnage to the entire healthcare space.
Well, I also do think that you saw like so many, like Michael Burry, for example, also participating in United Healthcare. I think a lot of other companies participate in United Healthcare because it's a way of de-risking.
David Tepper too. I think Tepper
did too. It's a way of de-risking your tech portfolio. To be honest, I know it's like weird. Like, why would you think that?
Oh, that's what I did, Oscar.
De-risk it, exactly.
So I mean, all these like super high alpha companies that have a ton of interest rate risk, they have a ton of pullback risk, and I took some gains out of and I basically reallocated it to healthcare because it's like if the market does, it still could perform okay, but if the market really pulls back, healthcare always tends to do well.
Yeah.
So you do have to think about that. Even me, the most bullish, longest holder of everything, having a little bit of a mix in your port and playing some different trends. And by the way, Oscar has an OpenAI. I mean, the tech plus thanks investing with the boys. We don't normally shout people out, but we know you guys. But you do have to play. You do have to play the game. You do have to be able to play the hand. And I'll just end with this, Shy. Like, be prepared for the chance that some of this gain could get pulled back here. It's been an incredible run. Like, if you want to have the cash you have in your account today, then you should sell it. Not because I don't believe it's going to go higher, but I believe there's a chance, very reasonable chance, that we will see a 10 or 20% adjustment, especially on some highly volatile names. And by the way, they will all eventually go higher. If you can time it perfectly, you sell, but a lot of these things will run away from you. So my play is always hold. There's a lot of ways to play options to get longer on things if they do drop. And you can also play options to keep making money on things if they don't drop. Things like selling puts and spreads, covered calls on the rise side. If you have too much to be able to basically make interest off your positions. So I know I gave you that Viking trade. I mean, that stuff's at $40 now, and they paid. By the way, it was $1.89 a share, Shy, on the 145s this week. They were paying $1.89 a share on 145 position for just January. So they're saying between now and the end of the year, Viking they think is going to go to $145, and they were willing to pay $2 a share for that call.
So essentially 147. That's crazy.
I covered my entire position. Like, I had 15,000 shares. I covered all of them.
And I think everyone's waiting for that Viking phase 2 data to drop.
It's probably going to go to like 400 because I did that, by the way. But I'll be super happy to take my whole position out at 145 and drink a
it's gonna be exciting. It's gonna be exciting. We're gonna talk about the Viking data whenever they drop it. Hopefully it's over $100, not $20. But we are at the top of the hour. Thanks for hopping on the number 10 episode. Earnings week is another quiet number 10. Yeah,
and we have a YouTube channel.
We have the YouTube channel. Exactly. Only earnings report that's on my radar next week is Palo Alto on Monday. Everything else is it's a little quiet week. Zoom on Thursday, Workday on Thursday. You don't really have much on Tuesday or Wednesday.
We have some big news coming, though. I can't tell anybody yet. Oh, we got Workday. I'm going to be watching Workday. I'm going to be watching, I used to care about Zoom. I got really bored of Zoom. But yeah, it's a quiet week, but that's the quiet before the storm.
NVIDIA week.
I'm going to be in New York tearing up the town, and you're going to be trying on tuxedos and wedding cake. I got you, buddy. But we're going to be making a really big announcement. One more big announcement is coming from the boys at Futurum Equities before Shy takes off for his wedding. But I can't tell you what it is, but just buckle up, baby, because the Futurum Equities is going to be doing something that all of you are very excited about. You will all be very excited about it, I promise you.
Very exciting. Thanks for hopping on, guys. Have a great weekend. Enjoy the R&R.